Hi, everyone. Good morning. Thank you for being here. I'm super excited to be here. This is my very first briefing I do on Black Hat. Previously, I had a chance to present two tools on the Arsenal in 2012 and 15, but this is my first time here. My name is Alejandro Hernandez. I'm from Chiapas, Mexico, which is in the southeast of the country, right over there. And I have been doing consulting and research for IOActive for almost 6 years now. I come from a computer sciences background. I didn't study anything related to finance or economics. I was self-taught on these topics. And later on, I took a couple of courses in the Mexican Stock Exchange in Mexico City and with a few other brokers. And in the end, I decided to bridge both topics I'm interested in. Right? And I found interesting results I will share with you today. This will be the agenda we'll be discussing today. A quick introduction, the core of my research, of my analysis, the vulnerabilities, the responsible disclosure process, regulators, organizations, some other ideas I have in mind that either me or you could develop in the future after the talk. And in the end, recommendations and conclusions for Trading App. A quick disclaimer. All the testing was performed using paper money, which is demo accounts, fake money, right? I only tested applications for end users, mobile, websites, and desktop applications, and the web servers that communicate to these applications. I didn't test anything else. Still, there are a lot of technologies behind this. There are a lot of protocols. There are a lot of other devices, for example, phones with embedded software. I didn't have access to this information. And finally, this talk is not about high-frequency trading, nor blockchain, nor how to get rich overnight. If you find a talk about that, let me know in other years. So this is how the stock markets looked years ago. The orders book were handmade, all the people yelling, sending orders, etc. Then we adopted technology. This is in the 80s, 90s, I guess. People, computers. This is the NYSE. And now the NYSE looks like this. More computers, less people. The open outcry is gone, and it was replaced by computers, by technologies, which are faster, cheaper, and easier to use. Nevertheless, there are some risks involved in this, and I will explain in a bit. Now, a quick introduction. Whenever the companies want money to develop their projects or to grow, they can go either with private banks or with private investors, or they can go public. And when they go public, they are recognized or distinguished by these symbols, right? We have Amazon, Apple, Okta, etc. And they flow through different network routers, different switches, like stock exchanges, right? They are they are in charge of communicate all this trading information. The most famous one in the US, evidently, is the New York Stock Exchange, NASDAQ, and we have other important ones in Tokyo, in London, in Shanghai, etc. Now, what information on what securities flow in them? The common stocks, other instruments such as ETFs. In our particular industry, cybersecurity, we have two famous ETFs that I love the tickers, HACK and CIBER. That's clever, that's cool. And also we have derivatives markets, futures, options, contracts for differences that are getting famous nowadays, and other markets such as Forex and crypto market, right? Now, it's important to distinguish the relationship between the different peers. On banking system, we have only one entity, a financial entity, right? So the attackers can focus into hacking this entity so they can change information in the databases and the records, etc., right? On the other hand, on exchange markets, the information is distributed on different ledgers. There are logs everywhere. You cannot suddenly steal 100 shares of Apple because that won't work. You might steal it in one peer, in one point, but it wouldn't be the same in another peer in the network. That said, the valuable information and the attack surface and the vectors are slightly different for those in retail banking, right? Does it make sense? The information is different, a bit different, and the attack the surface is different. Now, the brokers offer trading platforms. And in these platforms, you can do different things, such as funding your account by credit card or through other banks. You can monitor your balances, cash balances, your network, your equity, your buying power, etc., your positions, and their performance, right? You can create alerts. You can buy and sell securities, etc. Now, independently, if you are a speculator, an intraday trader, or a buy and hold investor, whatever kind of investor you are, this information should be known only by you and your broker, right? This is sensitive information. Now, how many users use these platforms? Let's see it by figures. TD Ameritrade, 11 million funded accounts. Charles Schwab, 10 million accounts. MetaTrader is a very cool platform. It's a very complete platform. You can link your brokers to the software, and you can trade using your account. It's the most famous one. We have Yahoo Finance. Initially, Yahoo Finance was only a market data provider. Nowadays, you can link your trading accounts, your broker accounts on Yahoo Finance, so you can keep track of your positions, etc.